Very good morning. Today, I would like to explain the new concept about the principles of bank lending. We know what is banking. Bank is an organization, financial organization, which organization collect the fund from or deposit from the public and lending money to the borrowers. So the major functions, the accepting the deposit from the public and lending the money to the borrowers is a major and main function of a bank. So the bank earning income or earning profit by lending money to the borrowers. So interest is the main source of income as well as expense to the bank. For example, the bank collecting the deposit from the public. So the bank has a liability to pay the interest to the depositors. So it is a major expense to the bank. Same time, the bank lending money to the borrowers in the form of various types of loans like housing loan, education loan, agriculture loan, construction for mortgage loan, jewel loan. Like that, there are so many loans services are available in the bank. So when they lend the money to the borrowers, the banks collect the interest from the borrowers. So it is a major source of income to the bank. So bank is a financial institution which earns money or profit or income in the form of interest by lending money to the borrowers. That's the main concept. So this is the common flow of money in the banking sectors, accepting deposit and lending money to the borrowers. Now I would like to explain about the some principles they have to follow when they lend the money to the borrowers. One by one, I'd like to explain about different types of principles they have to follow before lending money to any borrowers. In that, the first principle is principle of safety. We know the safety, the concept of safety. No, the bank before lend the money to any borrowers, the bank had to take some safety measures for their money. So what are the things they can do? For safety means here that borrowers should be able to repay the loan and interest in time at regular intervals without any default. If the borrowers take any loan from the bank, the borrower has the liability to pay. He has a liability as well as a responsibility to pay that amount to the bank, correct EMI. No, they have to follow the correct without any default. He has to settle that amount to the bank. So here the safety means that the bank should very carefully study about whether the person having it's a genuine person, whether the person having the willingness to repay the loan to the bank, as well as before lending the money to any borrower, the bank should very carefully about the borrower's capacity to pay the loan. Because after lending money to the borrower, in case if the borrower is not repay the money to the bank, it's very difficult and complicated to the bank. It will be create some loss towards the bank, banks. So to avoid sort of future risk and uncertainties in that lending process, they have to take some safety measures. We know that even any customers apply for a loan in the bank, they will take one report, civil report. Actually, CIBIL is a Credit Information Bureau Limited. It's an organization actually, which organization collect the credit worthiness data about the particular customer, and it will circulate that report to all banking and non-banking financial organization. They're having some criteria that how to evaluate the credit worthiness of the borrower. For example, if the borrower having more than 750 points score, CIBIL score, he is eligible to take any personal loan and any loans, because it's a one indicator point which tells about the credit worthiness about the particular borrower. So civil score is one indication. I like economic indicators, like it's a credit worthiness indicator tools, which are the banks are normally using before lending the money. In case if the borrower having below the 750 score, usually the government bank won't never lend the money to the customers. So this information actually based on how we are is based on that how we are performed in the previous loan liabilities. That is whether have you settled your previous loan without any default to the financial institutions, and how much loan liabilities you have in other banks. So this kind of information which is provided by the Credit Information Limited by to all the banking and non-banking financial informations. So this is one method. Then another, there are so many other factors also to be considered. For example, the capacity of the person. For example, whether the person has the capacity to repay the loan. Then how much capital the person having, how much that land and the resources the person having. Then collateral, which kind of collateral the banks can collect from that particular person for particular loan. Then for which purpose the person is going to take a loan from that particular bank or financial institution, the purpose of loan. Then which product, which loan, product means which loan, agricultural loan or educational loan or home loan. Then they have to verify that the profit, in case if any companies apply for a loan, the bank should very carefully about the profit earning capacity in the last 5 years, how the companies are earning profit. In case if there is any continuous loss last 5 years, the banks will not provide any loan to the companies. Then market condition also they have to very carefully study about the economic conditions. For example, if that economics is a prosperous nature, is growing nature, means okay, they can easily lend the money to any, not any bank borrowers. Easily the bank can lend the money. But in case if there is a recession in the economy, the bank should avoid lending money to any borrowers. And then reliability, whether the person is a genuine person or not genuine person. So these are the things to be studied by the bank before lending money to any borrowers. Because in case if the borrowers not pay the amount to the bank regularly, or if that amount will become a bad debt, it will affect that profit earning capacity of the bank. So to avoid these kind of errors, very carefully he has to study about the person, organization, and the capacity and capital of the person, all things. After that, only the bank should pay the loan to any company or any organization. This is a main important because for the safety principle. There are so many principles. Another is liquidity. Liquidity would also refer the quality of assets, which should be easily convertible into cash without any loss of value. You know that banks usually collect the collateral from the borrowers for the safety. In case if the borrower default, if the borrower not pay the amount regularly to the bank will seize his collateral and take action on that property. Now they will action that land or any properties which are given by the borrower as a collateral. Then now that asset, that collateral asset should be easily convertible into cash. Otherwise, in case if there is any legal problems or if it is not easily convertible into cash, it will be another risk and another problem to the bank or financial institution. To avoid that kind of things, when they accept any collateral from that borrower, from the borrower, it should be very it should have a deal easily. It should be convertible easily without any loss, convertible into cash. So then another important principle is principal purpose. For what purpose the banks going to lend the money to the borrower? Genuine purpose. Because personal loan, if you can take in personal loan, you can use it for any other purpose, any purpose, no need, no problem at all. Suppose if you take any loan for educational purpose, educational loan, that amount should be used to for only for the education purpose. So otherwise, if the borrower applied for any agricultural loan, that loan amount should be used only for the agricultural purpose. So these are things very carefully scrutinized and verified, physically verified by the bank before lending money. Then principles of profitability. Of course, as other companies operating their business to earn money, banking sector also they are operating their business to earn money because this is not a charitable organization. Because other organizations having that goal here, the banking sector also having that objective to earn maximum profit. Then principle of securities. Of course, without any security as collateral, usually the bank will never lend money to any borrowers. So to avoid the that the future risk and the uncertainties and the default to avoid the defaulting risk, the banks getting some securities from the bank. Then of course of the bank lending purpose, the banks lending money to the borrowers is there is a national interest also to create the employment to the national development. So the with that the main vision only with that vision only the banks lend money to the any borrowers. These are the principles of usually, these are the major principles usually followed by the bank of the principles of safety, principle of liquidity, principles of purpose, principles of profitability. These are the major principles usually followed by the banking sector for their lending.